Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on VRM. We think their e-commerce business is solid, that it will grow, and we have cars.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey, what's up, everybody? Welcome to Laughing Stock. Johnny, I think I gotta share a screen with you because you're not on here. Is that how we normally do it?
Yeah.
Hang on, let me share my screen here.
Start. That better?
There we go. That's better.
Nice.
Always.
Hello.
This always works perfectly every time.
Yeah.
How's everybody doing today? Happy Saturday.
What do you think about VRM?
I want to pull up the chart real quick on that one. That's a pretty good looking chart.
Yeah. I tried to go into their website, but it didn't allow me because I wasn't in the States.
It's oversold. This is a buy.
Yeah.
Yeah, no, I saw the news that said they cut 90% of their staff, which is probably not a good thing. That's usually means you're coming to an end.
Yeah.
Which means this will probably bounce back and be worth $90 on Monday. Or, well, Monday's closed. Tuesday. I would say Tuesday.
This is for your bounce portfolio, I think.
Exactly. I really need to just set that up. I'm going to put $500 in it and just let it ride.
Yeah, for sure.
The craziest ideas are the only thing I'll invest in.
Yeah. But we do have cars, though.
We do have cars. Gotta have cars.
Yeah.
But
last week it was about the boats, and this week is about the cars, right?
yeah. I like your dragon, by the way. It's pretty cool.
Yeah, I know. But I think you have cropped it out.
Oh, yeah. I guess you guys can't see. Johnny's got a dragon, though. It's pretty cool.
Believe us, we have a dragon today.
You thought cars were cool.
Yeah.
All right.
What's that girl's name in Game of Thrones?
Wait, what?
That girl in Game of Thrones with the dragon.
Daenerys?
Yeah.
Yeah, don't bring up that show. The way they ended that killed me.
Oh, it was too quick.
Just like you could just tell they didn't have the content that from him, for the last book. So it just felt, like you said, like rushed, and I don't know. It's just,
No, I didn't like it either.
Yeah.
I like the show in general, but not the end.
Yeah, I think that's everybody. But what was I gonna say? So today, guys, we definitely want to go through some of the fund reporting. Everybody had to just file finally. So there's a bunch of 13s that came out, and then I wanted to get through kind of some of my watch list and just check up on things. I've been heavily focused on BNED, obviously. There's other stuff I've been looking at, but nothing's caught my eye like BNED has, and now it's a pretty large position for me. So that's kind of my stock of the hour. I guess
I'm in the same boat there.
What's up?
No, I'm in the same boat there. We both have a large position, for our personal portfolios, and for me right now it's just Alto and that one actually.
Yeah, I mean, like you said, Alto would have been a great buy when it gets down there. I was getting greedy and seeing how low it would go, and then I think when it popped back, I just I missed it enough that I was kind of out of it. But we'll see. Obviously, I think both those, it's going to heavily depend on the next earnings report, which I think I think you're smart. I think your choices are good right now, because I think both of them are gonna beat earnings pretty handily. I think with Alto specifically, all the one-off things are going to be done, and crush margins look good right now. I think this is going to be a turnaround quarter for Alto, and I also think that BNED, with everything being pushed back, and it doesn't look like we have any conclusive evidence that news story is true. Everything that I've read and everything that I've seen almost guarantees, I hate to use that word, but it looks super bullish that it's going to stay either as some form of opt-out, or it's not going to be a fully opt-in process, or if there'll even be a change, because like we've said before, I don't think they're going to reach consensus. So I think that we're going to have a few quarters, no matter what, of FTC continuing and to continue to generate this free cash flow. So I think both of the earnings reports, which when's Alto's next earnings?
I think it was the first 2 weeks in March or something. I in the back of my head I have the date 14th of March, but I'm not sure.
Yeah, I think BNED's right around there too. It's somewhere in earlier March. So, but you know, that'll be a good, interesting time for us, because that can be big for the thesis. You know, if they're able to prove that they're able to generate, you might see people start to kind of go back into some of the more riskier stocks when you realize and see free cash flow. Because when you see free cash flow, I mean, that means the business is basically starting to succeed.
And I think for Alto's case, you remember how much it climbed before Q3. So I don't think it takes too much of proof that management actually knows what they are doing.
Right.
They don't need to deliver like 110%, you know. But I think if they show that we messed up a little bit in the last one, but now we are on the right track again. If they just show that and can convince stock owners we are doing something here, I think it can bounce a little bit just on that, you know, because it has some interesting stuff coming up in the short term after the Q1 report anyways.
Yeah, no, I agree.
And by the way, I saw some Justin was tweeting or replying to someone with there was a modified version of the Greet thing in the States, and some people were talking that it was not as positive towards ethanol that it was in the first draft, and then Justin just replied like, yeah, but this was always going to happen, so this is no news. If you were surprised by this, you didn't fully understand it from the beginning, you know. So there's things like that too, like people can interpret news in a wrong way, and when the sentiment is already a bit negative, that's usually the case, you know.
Yeah, well, I think for the kind of companies that you and I are going to look into, that you're always going to have this other side that's going to be think that they're avidly right against us, and maybe they are at times. I tend to really pick and choose when I'm going to go into something, and that may change over time. You know, we'll see if my track record obviously continues to stay how it is. I'll continue to kind of pick very few stocks and go in heavy on them. But we'll see. But no matter what, people are gonna have different opinions on things. You know, Justin's been proven wrong before, so it's not always to say that he's right either.
No.
You know, like, you know, you have to take that risk on, and you have to kind of ride out some of these storms. And, you know, do I think Alto is going to bump above $4 on an earnings beat? I don't know, just because of the management being how it was last time. But can I see it start to get approaching that? And then as time goes on, them have a real chance of going way past that? Yes. But I think it's going to be a bit of a slow grind. But I could see it turning around.
That's if they can deliver now on this next quarter report, the next catalyst is in the summer, you know, so it's not that long term even.
Right. Well, and that's the other thing too, is, you know, a lot of our theses are I would say under a year or up to a year. Sometimes it's multi-year, but that's typically not the kind of investment strategy that we're looking for. When you're looking for stuff and you're looking around 52-week lows, you know, you're just kind of looking for some kind of catalyst that could turn things around for a company. I feel like that's a big part of my screening process is looking for that. And, you know, sometimes it's actually beneficial for us as investors. I know this sounds crazy, but when management messes up like that, it provides opportunity, you know?
Yeah, and it has multiple times since then, actually, in Alto's case, but only if we are proven right in the end. But, I mean, if you bought at 175, you are up a fair bit in a short time already.
Yeah. So, and I'm sure there's some people that took positions down there. Did that get ever? How did that look on the chart? I just want to see. So it did get oversold down there too. So if you went just off oversold on that, I mean, it's not a. Even on like this is a 2-year. It's not oversold on the 3-year, but still.
Yeah.
But like I said, you know, I mean, they always say to look at the chart based on how long you're on average holding, and I would say, you know, you and I tend to hold things for anywhere for 2 years. I mean, that's how I do it. I don't actually want to put words in your mouth either. But,
no, but I'm the same. Just as I have explained in the past, I went into Alto before I started with the sheets and everything. So personally, for me in Alto, I've been holding it for more than 2 years even.
Yeah.
But it's a bit. It's a bit because I was doing investing completely different when I first entered. But then I have used the sheets and added, in my opinion, in the right times after that. You know, when it was cheap, below $2.
Right. I was thinking I should probably when I start doing my charts, I should reset these so they're a little bit larger so everybody can see them a little bit better, because I do forget it's zoomed in on here. I hope you guys can see that. Let me actually make this full screen to see how
I'm
this
watching
looks.
the stream and I can see it, Dane.
I just want to see on my laptop. Yeah, okay, it's not too bad. Okay.
Yeah.
But yeah, I mean that's kind of the way some of these plays are going to work, and you know, this right here, you know, you can see it's a pretty obvious drop off there, and that's the kind of thing you want to see is when something really collapses, or like after this big gap down, you know, it's a good place to look, you know, and similar too, you know, not that technicals are everything, but I mean, look at, you know, it's somewhere down here it paused out, and now you can see it bounced in that same area. I know that's so stupid, but how many times have we seen that works out?
Yeah, it has.
Yeah.
And in my opinion, just in Alto's case, if you just go on the book value, if it drops to like 180, it's a bit crazy in my opinion, crazy cheap.
Yeah. What's their leverage right now?
Oh, I haven't pulled them up in a while on the fundamentals actually.
Here, I'm just gonna. Oh no, what is this? Hang on just a sec, because mine's giving me some kind of error. Of course.
Yeah, I can try to check here. And by the way, I know I saw Justin tweeted, this is probably a year ago or something, that he added substantially when it dropped down to 126, around there.
me try this again. I just updated something here. This is an Alto though. Oh, is this Alto? No, it's not.
Yeah, Alto ingredients.
What's up?
It says Alto ingredients, right?
Yeah, but it didn't update the actual information. So sometimes I run into this with, you know, like I was saying, I was having the issue, but I didn't realize it was on this one that it's not going to work.
All right.
That's a pain. If it's not going to update here, how can I get this? Let me see what I can do here to try and get this to update.
Yeah. What did Roaring Kitty say when he faced issues like this? The life of a retail investor, right?
Yeah, basically. There it goes.
You fixed it?
Yeah, that's why I'm saying sometimes I don't know why I get these weird errors, but I've dealt with them so many times now. Oh my god, Excel sometimes drives me nuts. But it's all good.
I see in my sheet Alto shows up as levered, but it doesn't issue shares, and I think that's because of the book value.
Possibly.
And also they don't have a lot of debt.
So it looks like they got 107 in debt. So they're not too crazily levered. Not, I mean, that's nothing, but it's not much, all things considered.
No. And keep in mind, they still have the West Ham plans, which there's a lot of talk, at least amongst the investors, that they might sell off, and in that way they don't need to raise capital to start a carbon capture program and all that stuff.
Yeah.
But who knows what they're gonna do?
I just want to look at the actual balance sheet real quick. So it's really about 75 million right now in actual long-term debt.
Yeah.
What just happened? There we go. Do you know when that term loan ends for Orion? Because it doesn't say here.
No, I don't know, but I think they took it fairly recent.
I'm trying to think if there's a quick way to shoot down to that. This is just where they comment on
2027, I think. No, 28 it says.
28. Okay.
Yeah, November 2028.
Yeah, it doesn't seem to list it right in here. But either way, all right. If you 2028, so plenty of time. Obviously, it doesn't matter.
They have it in one of the yearly reports, I think.
Yeah, that's usually, if I can't find it in a 10Q, I'll go to the 10K and try and see it there.
Yeah.
But I mean, you can see they got 22 million in cash right now, and granted, this is a little old. This is from 9/30, so it's trailing 12 months, so it's the data sometimes doesn't match up probably with what other people have, which if I'm, you know, you just get used to, that's how I'm looking at it, so it's not a big deal. But
yeah.
But yeah,
no, I think if they can prove to us that they are not like completely what do you call it when someone is bad at their job? Incompetent.
Yeah, incompetent. There's a lot of words.
If they show us that they know what they are doing now, I think Alto is well positioned and still cheap, you know, in my opinion.
Yeah, I'm just trying to see. This thing was like updating all these. For whatever reason, when I updated my ticker here, it updated all my tickers, so I guess all my information's pulled in for these other ones. So we got those if we want to look, but
yeah.
But we'll see from here what else we can find. So yeah, I said I wanted to go through the watch list. Did you want to cover anything else on Alto, or?
No, it's okay. There's no really new development there.
Yeah.
It's all about in the nearest term the next quarterly report.
Yeah, and same thing with BNED right now. I mean, the major catalysts going forward are going to be in March. There's another session. We'll see. The people will put out the session hearings from the February ones. I keep checking the website, and it hasn't come out yet. So, but I'd already spoke about it a few times. How Private, one of the other investors, he had actually tuned into them live, and they all like the big thing is like we're talking. Consensus came away, and it wasn't agreed. So it looks like we'll kind of have to wait and see. I think it's probably before the March sessions when they'll release the updated wording for the materials, similar how they did this last time when they were possibly talking about opt-in and we were all confused on the wording. That probably will come out sometime before the third session. That way everybody has like a final, because basically in that third session, at the end of it, they'll all do a final vote count to see if everyone agrees and keep it as an opt-out model or if they want to change anything. But I like you had said on the last stream, I think they did a nice job talking about making sure if they provide a service that's cheaper and it's more accessible for the students, and they're very transparent on what the pricing is, so you can quickly look when you're gonna say, hey, yeah, I want to take part in an inclusive access program. If they can show you that the price is X amount cheaper than the other books, and they itemize that for you, as well as say very clearly, like, you can opt out right now, and we're going to send you other opt outs in case you want to change your mind later. I think that's really the best way to do it. I think that solves the issue. It allows the schools and the bookstores to continue to take advantage of having a smarter model where they're buying things for everybody all at once and saving a lot of money in that way, which also that savings gets transferred onto the students, as opposed to the OER model, which is an unproven model, and everybody who supports this OER idea fails to explain how that's actually going to save and how it's going to improve over time. And then if it is an opt-in model, they don't explain, number one, how students are always going to have access to the books when they need to, which is why this was all put in place in the first place. And then also to how long before that cost savings. Yeah, there might be an initial cost savings, but under an OER model, it's kind of disproven to me that all of a sudden is going to save them money. It sounds like it's going to put them behind another paywall. So there's nothing proven in that model. I don't know why they're so avid on pushing for this, besides the fact that, like I said, it's up to her sponsors and for her grants, and when I say her, Nicole Allen's the one who wrote about this, and it's not just her. There's other people involved in Spark, but she's the real proponent of this. And if she's wrong on it, which it's kind of seems like she is, we have a lot of really big institutions here which are highly respected, and they're the ones that are commenting and saying, like, hey, this program has worked, and there's a ton of statistics proving that it's worked. So I don't know why the argument would be to change that idea out of the opt-out. Why not just shoot for transparency and letting the students have the choice? Like, make it very obvious they have the choice.
I also thought that let's say some of the university has been a bit bad in the transparency, and that they have tried to sneak in the fees and kind of like trick the students, like some of those stories were. I think moving forward, when they have seen now that there's actually are hearing about that they have to change the model. Remember that guy in the transcript that talked about the efficiency just on a organization level for the universities?
Mm-hmm.
If some of these universities continue to not be as transparent as they should, they actually face the consequence of losing the whole model, which I think will hurt them if that guy is right, talking about how efficient the model is and how tricky it would be for them to manually do all that stuff that he explained, right?
Yeah, well, I think that's why you see the schools wanting to hand off this. Like, they're happy when a company like BNED comes in, or one of the other main ones. Main other ones are Follett and Core, and when those guys come in and they basically are this third-party operator that just kind of sets up the whole system for them, and and they run the bookstore. They handle the retail area itself. I think that's something that a lot of schools would just happily hand over to someone, and if they're providing a net benefit to the students in terms of cost savings, and it keeps them also within the regulations. That's another big thing too, is the schools have to stay within these regulations. This is just another thing that they have to worry about, making sure that they're staying on top of. And if you're able to hand that off to someone, I can see why they all benefit from it. And you can argue, yeah, they're getting a kickback to it, but that's just how a business works. And I'm not saying that we don't want to provide low cost for the students, but at a net basis, if these things want to run, a college is still a business. It still needs to make enough money to pay for itself. So if you can have another company come in, you get a little bit of a kickback from it. The students are saving money overall. Then I don't see the negatives of it.
Yeah, I agree.
But yeah, so like I was saying, March will be the next catalyst for that. I think that's earnings, and then April would be I think April 15th, they said, would be the last chance that they could have to offer the preferred shares, possibly. Or see if there's any kind of merger or anything like that comes down the pipe, and then yeah, who knows? Maybe by the next session, we'll have a better idea if the Department of Education actually is serious about actually changing anything, or if it was all just kind of blown over. If it is, I think I could see this head right back to $3 or $4.
Yeah, it's not impossible when you saw what happened on that Friday.
Yeah. Well, even before that, even before the news came out, it was over $2. It had crept right up.
Trading before the news.
So, yeah, just a pretty obvious one.
Yeah.
Did you want to go through some of the funds?
Yeah, I was thinking just the Bury one. I haven't checked the other ones, to be honest. But I plan to do that this coming week, though.
Yeah. So he's.
But I saw.
We'll go by, I guess, percent of portfolio. That's an easy way to do it. So obviously he's in some of these Chinese ones, and if you guys have ever read anything on Bury, Bury will look at valuation of things. I give him credit because Bury he'll put his head out there just based on value. So obviously Baba and JD are probably cheap. I think you could argue that on all kinds of metrics in the way the businesses have performed, but most people just don't want to take the political risk, which not to say isn't there. But he might be right. I've heard a lot of people argue that with Chinese companies too, like the chance of there ever being a real conflict between China and the United States, like it's such a disadvantage to both countries. We are so heavily involved in trade, if there was really to be an issue, it would really be a net negative for both countries. So just that alone, I think deters everybody kind of, enough that I don't think there's going to be the same kind of issues that you see. I don't picture either side to do anything crazy, and not to I'm not trying to be political, but if you look at how things have turned out after the Russian attack of Ukraine, or however you want to argue that's going on, obviously it's been a huge drain on Russia. It's been a real struggle for their economy and everything like that. So I think China is able to kind of probably look at that, and the concern is over Taiwan usually. And the chance of them, I think, making a move to possibly take land or territory or anything like that and upset the entire, balance of world power, I think that's a really, really dangerous move in terms of a calculation. I think, like I said, who knows? I don't know any of this stuff. This is definitely outside my wheelhouse, but I would think that would be a real dangerous move. So I don't know. Burry does look at the macro picture too. So maybe he just he's fine with taking that risk on,
Yeah. Yeah, and if you go through the companies here, you find all types of market caps, and if you read there's some PDFs out there about a lot of stuff he has said, and he has said multiple times that he just looks for value everywhere. Doesn't matter where, like he looks everywhere.
Other positions that have seemed to work out for him. I mean, a lot of these are actually down a little bit. Some of them are up. That's his estimate. Okay, yeah, estimated average on this side. Some of these are up.
I'm not. Have you ever figured out how accurate that is? The average, the estimate average.
Well, I think by them estimating the average price, they probably just get the average price for whatever quarter this is. So it depends. I mean, if something's super volatile, obviously the average could really vary. But I bet they're somewhat close.
Yeah.
Close enough that you can at least just kind of understand if he's up on these things or way down. Yeah. He's got a lot of new positions, but the other thing that's tough with Burry is he moves in and out of these things so quick.
Yeah, he can be out of a lot of these already.
And Burry said he's not afraid to, have a high portfolio turnover. So, if he sees a 50% pop on something and he's happy with that, he'll get out. He doesn't seem to be a long-term holder except with, I could picture him having Baba and JD as a long-term hold that, he's adding right now as this continues to trend down. So, he's probably getting more bullish the cheaper this gets, because it just starts to get to the point where the value is going to outweigh the risk. I mean, that's really how you should measure things.
Bit interesting to see that he's back into QRTEA.
Yeah, I mean, he's been in and out, but it's also his smallest position, so for whatever that matters. But he bought at 67 cents. It's at 88 right now. So I mean, he's up quite a bit.
And if I remember correctly, and I may not do that, but that was even a cheaper entry than he had it. What is it, like a year ago or something like that?
Yeah, I would say it was at least a year ago when he was in it the first time, and then it got a nice bounce. He sold out, and then the whole thing just fell apart. Their earnings came out and were really rough, and just timed it perfect.
Yeah.
Advanced Auto, that's one you and I had talked about, which hasn't done too much yet, but he's got an average price of 56, which is I had a definite buy at 55 when I was looking at it last, so he thought very similar to what I did.
Yeah. And I just, before the stream, I quickly pulled up VTLE and big lots. We were talking a little bit about big lots, right?
Right.
And big lots has a big short interest as well. And I noticed a little bit on some of these tickers, they seem to have a big short interest. So it's a bit interesting just to see that.
Yeah, I mean, I don't think it's necessarily a big surprise that he would possibly look into higher short interest companies. For anybody, when the short interest starts to climb really high, it can just. I mean, we were just talking about is it the Children's Place, right? That's the company.
Yeah.
They had a huge jump this last week, and they actually missed earnings, which caused like a huge drop, and then another group bought into the company and bought like 50% and shot the share prices through the roof. So, you just never know. It's hard to predict some of these things.
Yeah. Do you find VTLE on that list? I don't see them.
I don't, but this is I don't always know how accurate this is. Let me
because it should be at 31%.
What are you getting that from?
I pull it from Market Watch.
Let me just see what Yahoo says. This is from January 31st. They had 20% of the float, 17% of the shares outstanding.
Yeah, okay.
So it might be climbing though.
Yeah, let me check. Mine is from the end of January.
I mean, just looking at the chart, 40 looks like a decent entry. Let me see if this actually works right now. It's a miracle it works.
Wait. Nice.
Come on. There it goes.
I found this a bit interesting just quickly looking at it, but I haven't digged too deep.
I mean, it looks really cheap.
Yeah, that's what I was saying also.
Oh, I've actually, I have pulled these guys up before. I had them on deck, so obviously I liked what I saw.
Yeah.
Did you read anything on these guys?
No, I just barely before the stream today I took them up, but I was thinking maybe we can go properly through them on the stream.
I actually like this. Oh, this is from February 5th. Laura Starks, I think, is actually really good when it comes to the energy area. I don't know if you ever read anything by her, but anytime I do, she really seems to be on top of things.
Yeah, I actually pulled up a ticker on Thursday that she was writing on.
Gotcha. How much have they spent on acquisitions?
I have nothing, but there's a big increase in capex from
I was gonna
22
say
to 23.
it's probably less acquisitions in the traditional sense and more acquisitions in terms of land and building out wells.
Yeah. And they have negative free cash flow on a 7-year average. So.
So I have positive free cash flow on a 7-year average.
Do you have positive?
Yeah.
Okay.
Or are you talking straight free cash flow or cash flow from operations?
Free cash flow.
Oh, never mind. You're right. I have a negative free cash flow.
Yeah.
I have it on a 3-year average too. It looks like they haven't had a ton of free cash flow in terms of I think it's just the capex is so high.
Yeah, and have you seen the debt jumped a little bit, or not a little bit, a lot actually, from 22 to 23? So if they bought something like a land or like you said, they have spent a lot of money now recently.
Yeah, right.
No dividend flow.
Sorry, what were you saying?
There's no dividend in my data set.
Yeah, I don't have a dividend. I think with this, I would value this off more cash flow from operations.
Yeah. But do you understand the high short interest here?
Well,
I mean, it's
they
30%.
do have. They have a lot of liabilities. 1.93 billion of net long-term debt.
Yeah.
So there is a lot of debt, and it starts maturing in 2025, and then they're pretty much good until 2028. But those notes are at 10% at 700 million, so they're spending 70 million just on those every year. That's pretty high. I mean, they're definitely paying a lot in interest. Yeah, they're saying the book value is much higher, and that's what I was getting too. I was like, it just looks super cheap on that. But I mean, I know this is cyclical, and there's obviously a lot going on here. And she does comment on the short interest, so it's interesting that the short interest is so high.
Yeah.
Yeah, I mean, I kind of agree. They have a pretty... They're generating a lot of cash. And you know, the recent... you know, they have 575 million right now, so it covers any kind of short-term maturity coming up. I know this says 47, but they were just saying I think it's going to be... I'm just going to pull up the... most recent 10K here, if I can, or 10Q.
For some reason, my 10Q is not loading. It says they couldn't find this ticker.
Yeah, I got mine up here.
Yeah.
Yeah, so they can obviously cover even through 2025. I mean, it's not, you know, they still have plenty of time to even have to deal with this.
Yeah.
What are these notes trading at? Did you check FINRA?
No, I can check it now.
No, I'm just pulling it up.
All right.
What is it, VTLE? So where's the 20? This is Vitality. Who is this? This is...
They recently had a name change too, or 1 year ago.
This just pulls up Vitality. I don't know if this is even right.
No, I don't think so.
It's such a pain. This is why I hate the stupid FINRA website.
Come on, FINRA guys, please. At least give us an option to use the old version.
I know. It's so poorly done now.
Yeah.
I mean, if any of these are the right ones, I mean, this is saying they're rated double B, B plus, triple B plus. I mean, so some of these coupons look close, but I really don't think this is them. So whatever. I mean, maybe the notes aren't. Maybe they're owned by someone. I probably could read it right here, like a smart person would do.
I'm sorry, I'm a bit out because my links are not working here. I have to watch your stream.
Gotcha. Well, let me see. Yeah, I don't think they're like notes as in like you can buy them. I think they're just notes in general. So what's their cash now is at 589. This is from September 30th. So yeah, they're good. They don't have preferred right now. Okay.
No.
But yeah, I have $80. If you know, if you're taking that into consideration and with the free cash flow, I mean, I have this could be worth over $100. Now, obviously, it's a commodity and it's cyclical, and this has really jumped around. I mean, you can see, you know, this was worth $90 on a book value, or even a tangible, and then it went down to 11. So based on how the structure is working, these things can change drastically depending on the year. Now, that was COVID, so COVID probably smacked the business. But I mean, you can even see back in 2014, we're at 188 for book value, which, if we just look at the chart one more time here, I know I pulled this up probably multiple times, but if we look at a 10-year, I mean, you can see this was worth a lot more. Now, I know they've diluted share counts, but not by anything crazy. I mean, look at this at low in COVID. What was this number? Where's the little inspect guy here? Because we're worth $8. It dropped down to $8, and then up to 100. So,
well, that's cheap.
Yeah, we're not gonna see it that cheap anymore. That's not gonna happen. But
check their earnings for the last 2 years. It's pretty high compared to the share price currently.
Yeah, I just wanna. I mean, the debt in the last year really went high, which I'm assuming they took out another one of those notes to probably pay for some of this capital expenditure. But that's a big issue. Is they are such a heavy capex industry. Because, you know, like we said, they generate good cash flow from operations. Like, from a business perspective, they generate a lot of money, but it costs so much money to run this business.
Yeah.
You know,
and that has gone up since it's at a record high almost, from what I can see.
Yeah.
They had a little bit more in capex in 2014, but that's a bit irrelevant now.
And if you look historically at net cash flows, you know, it wasn't really until this last trailing 12 months that they took on a lot of debt. They've never really had great net cash flow. And, you know, anytime they did, it's when they took on a lot of debt. So you can't really count that.
Yeah.
But
the retained earnings has improved the last years, but still negative.
Yeah.
And do you have a big acquisition in 2018?
2018. Let me just make sure I'm under the right column here. I do. I got 15 million. Nothing crazy.
Okay. Now let me check.
But like I said, it could be that this stuff's falling under capital expenditure.
Yeah.
Which it wouldn't be the first time I've seen that happen with the way that this data comes through.
Yeah.
But even if they're not generating like a ton of cash and the business has like periods where they generate it, I mean, the problem is right now that I see that I would think would be a negative is that this that shareholders keep slowly being diluted here. And with the amount of debt that they took on now, that could further affect the ability of them to generate cash flow. And, you know, you might start to see book value continue to decline. And if it continues to decline, it's going to be hard to argue that it should be worth a ton more than where it's at. I'm not saying it's not discounted now. It's obviously discounted. But... And maybe this could be worth, you know, $60 in the future or something, which isn't obviously as big of a return as if it was to actually get up to like a discounted book value.
On the chart, it looks like around 40 is, it has some resistance on around 40, right?
You mean support?
Yeah, I mean support.
Yeah, and then like I was saying, I see resistance around anywhere from 50 to 60. So I don't think they're going to generate earnings probably anytime soon, because I bet a lot of this earnings is coming from the debt that they took on and the fact that they keep diluting. So I can actually see why some people are being pretty bearish on this, because it looks to me, and even if you look at a little bit of a longer term chart, you know, we're headed down, not up.
Yeah.
But I don't know. I mean, like I said, it's not to say I can't see this bounce up to $60.
No, and that's the 52-week high, also 63 almost.
Yeah.
But what do you think about the like we have talked about the increase in capex, but at the same time, revenue has almost it's not cut in half, but it's getting close to it from 22 to 23.
Yeah, well, you know, as they add more and more onto their business, if they're taking on more land, you would expect revenues to go up. The issue is I mean, gross margins on a 3-year average are up, so they must be up, right?
I saw the single years; they are down since the last year at least, and pretty heavy too.
Yeah, but even on a gross margin, they're at 74% for me.
Yeah.
You know, on an EBITDA, they've been all over the place, but still trending positive the past 2 years. Which, like we said, COVID probably hurt them.
Yeah, I see. We have a little bit of a difference in the numbers here.
Well, we probably will, just because it's, you know, trailing 12 months and whatnot. But
yeah,
I just want to go to my database here then and just update this one.
Yeah, I think I will add it to the tracker just just because based on what we have talked about, and it's not like it has enough interesting things that I want to keep an eye on it.
Yeah, I'm going to put it around 60. I actually think is fair value at the moment. I don't think 40 is too bad of a price for it. I'm going to definitely add that there's high debt for this. But, I mean, that might be being a little too optimistic here. But I would become more interested in this if this really had a decent pullback, because I think you could see in the future, if they stop diluting and stuff like that, that this could turn around and be worth something in the future.
Yeah.
You know, and even with the amount of debt they have, they do have a large cash position, which like we did say, that's gonna get degraded, but they have plenty of time for their debt.
Yeah, they do.
And you know, typically when you see heavy capex like this, that's bullish in terms of the cycle.
Very little insider bias though.
Yeah, I would like to see something more on that.
Yeah.
What is management saying? I'm just gonna close out some of these links because I got so many open. I guess all I have is just this. So it looks like they're generating an extra, or they think they'll generate an extra 25 million.
Okay.
Sorry if this is a little zoomed in for you, or zoomed out, I guess. And they said that they based it on, says Vital Energy purchased and financed the assets on the same terms as a Henry purchase and sale agreement, which values the company's shares at $54.96. So we're a little down from there. So, you know, like I said, possibly I could say 60s maybe a little high. Just it's tough because of the CapEx and knowing in the future, kind of trying to predict what that's going to do. I mean, I don't know how you know that, but that's why I think if you find this if you can get this cheap enough, then you can kind of hedge your risk on how much you think that's going to produce. Because if it was 25 million.
I just figure out that I had been a tracker already.
You do have it?
Yeah, I had them.
Yeah. No, I mean they're interesting.
Yeah.
I just want to see it get cheaper. I think that's what I'm going to put. Is just right now it's too expensive, but I do like it.
Yeah. No, I added them in September. And in my comments, I wrote that Barry was already involved, so...
so he must have had it in his last filing?
Yeah, I think so. But didn't it say new, or maybe not?
No, let me pull it up real quick. It might just be that he added to it. Yeah, it is new. It says the first quarter owned was quarter 2 of 2023.
Maybe he's been in and out.
Yeah, he must be, because I don't know why it would say that. But it does say that he only owns the 87,000 shares, so it would mean that, you know, this is a recent purchase in. But I've watched Burry now long enough. He does a lot of swing trading, so he could be in and out of this.
Yeah. Yeah, because when I added it, and in my notes it says that he is involved already in 17th of September was when I added it, and then it was trading at $53. So it was a lot higher than today, you know.
Right. All right. What do you want to go on to? What was the other one you said you wanted to look at from him?
No, just I think I pulled up. I'm not sure if we need to go through it, but big lots. But that has had a bounce already, and I see people are trying to make it into being a new GME and all that. I'm not buying that story, but big lots also have high short interest.
Yeah, I wonder how much that sold off though in this past week.
Yeah, because when I looked at it, it's around 24 or something, and if I remember correctly, it was above, almost like, I think it was above 30 at least, last time I had a look.
Gotcha.
And big lots is also something I've had in the tracker for a while.
Yeah, I just want to pull up and just take a peek. I know they're traditionally a pretty levered enterprise.
Yeah.
But I mean, this is why too. I mean, you see all these things get these stupid bounces. So sometimes when you're looking at stuff that's really distressed and it looks really ugly, this is what RK used to always say is, if you can calculate that it's not going to die and you have some time in there, I mean, you can kind of hold it and catch one of these bounces. I mean, it's true cigar butt investing, but I guess as long as you position your position accordingly, and don't take on too much risk, it can be worthwhile.
Yeah. What do you get for retained earnings for them?
For big?
Yeah.
Currently around almost 80%.
Yeah.
I mean, they've been doing share buybacks, which is kind of crazy actually. But
Yeah, I see that.
But the issue is this looming debt that keeps getting larger and larger.
Yeah.
And their ability to be able to pay for this, it's kind of questionable. Earnings has been really bad this last trailing 12 months. 2023 was a really bad year for them.
And I guess they have closed some stores. Do you think so?
I'm probably.
Because I see the capex is down quite a bit from 22 to 23, but also revenue and book value, you know.
Yeah, I mean, ironically, even as levered as it is right now, I get that it could be worth like $4.
Yeah.
Now, the only thing I'll say is, you know, this dividend's probably gone. And I besides just pulling up that article, I want to just look at the balance sheet and see when that debt's due, because I don't know. This one's one of the ones that I just want to see what that debt is too. So long term's 533. So what did we actually say? What did mine say it was? Yeah, 2.4. So a lot of that must be leases, right?
Yeah, it is.
Yeah, so it's not nearly as levered as it looks. So that's one thing.
No.
It's really important to differentiate. Not to say it's not a liability, but in terms of current liabilities, it's not. So they have a credit agreement, aggregate commitment amount up to $900 million. It's pretty impressive, until 2027.
So they are saying long-term 533, right?
Yeah, which means that it's really just this credit agreement. That's really
Yeah,
debt,
and-
is the credit agreement.
Yes, and in the sheet it looks way more levered than that.
Yeah, I agree. Actually, now actually I want to read that article real quick and just see what that guy was saying. So he's saying they're
But
taking
keep in
steps to
mind, though,
enhance
that-
liquidity, make a turnaround. Macroeconomic factors have obviously affected the company. Debt to equity is concerning at 7.8. Current ratio is 1.44. Current ratio, if you don't know, is just current assets and to current liabilities. He got book value in October was 1072. I get
I have the
1073. Okay, so
Yeah.
reasonable.
But keep in mind that this got a big bounce after the filing.
Yeah, that's that's what caught our eye the other day. Is we were joking around. I should have went with what Johnny was saying here, because he's like, he owns big, we should buy now. And not that that's much of a thesis, but sadly, especially with short interest, you called it perfectly. That would have been a decent move.
Yeah. And I saw something on Twitter. Was Anthony Chukumba, he was involved in GameStop, right? On the wrong side, or?
I'm not sure.
No, because I see his name being mentioned, and also, is it Kramer, I think?
Mm-hmm.
And people are trying to give them some shit now because of that bounce and the short interest and all that. So they are trying to, at least some people, create links to GameStop. So, you know, and I saw on Ape Wisdom, it has gone up a little bit there on the rating, and Ape Wisdom is like a social sentiment site.
Yeah.
So just something to also track a little bit, because you know it can take stuff like this can take off a bit if you know the Reddit crowd and everything jumps on it, especially with Barry behind it. But I think it went up 27% or something in a day this week.
Yeah, actually, where was the chart on this? I mean, like we were saying, I mean, it is distressed, but my issue with this one is trying to predict what the market will be, because obviously they're struggling right now, and if they can't keep sales up, I don't know. Like, revenues are at an all-time low for the past 10 years. You know, turnover's dropping.
Have you been to one of these shops?
Yeah, I have a Big Lots not like less than 10 minutes away from me.
Yeah. Okay.
And you know, it's they have all just kind of random stuff there. It's like a hodgepodge of things. It's usually pretty cheap stuff. Like, they have good deals and stuff like that.
Yeah.
You know, like I was reading in that article that someone had posted, and some of the comments were saying is, you know, I guess it's kind of a question on how strong is the American consumer. Are they going to continue to buy some of the extra stuff and maybe go to these places? You know, and some people are arguing that they're selling off stores, but you know, if you have some underperforming stores and you're trying to keep margins up, especially when you don't have great margins, it's probably not a bad idea. It just hasn't materialized yet.
I found an article. If you go to the press releases, not an article, a press release, I mean. And you filter by 2023.
You talking this quarterly results presentation or what?
No, just I'm in biglots.com/corporate/investor/news. Yeah, investor news. Just if you press that one and filter on 23.
Yep.
And then you go to 7/5/23. The Big Lots announces execution of that one.
I just want to blow this up so people can see it a little better. All right, I'm just gonna kind of skim through this so I can get the idea here.
Yeah.
It says it looks like they're getting rid of their corporate headquarters.
Yeah.
Yeah, so obviously they're trying to raise capital. I don't think management's, doing the wrong thing. I do question the continued dividend, and also the share buybacks at this point, because I think this could be cheaper. Like, for instance, if you're going to do share buybacks right now, but you're going to have to cut the dividend because your debt's somewhat high right now, you could always cut the dividend, let the share price drop, then do your share buybacks.
Yeah. It's a bit weird that they. But I guess maybe that's the next thing that will. If they cut the dividend, the price will fall again.
Right, which is why I'm saying then you would want to do your share buybacks.
Yeah.
So you could cut it, and then you could probably de-lever yourself and pay off that credit agreement and make sure that by 2027 you're good. I would actually think I would think what a bullish thing the company could do is cut the dividend, let the price come down. Now, whether they want to spend it on a mix of share buybacks and or pay down the debt, but if they just pay down that debt, the $500 million credit agreement, and they can get through this kind of rough patch, you know, and continue to maybe sell stores that aren't profitable, that kind of thing. I could picture that being a smart strategy.
Yeah. And
then reintroduce the dividend when they get back to a better position. Because, I mean, if you look historically, I mean, look at free cash flow. So, you know, last 2 years not great, but look at here. I mean, I get an average over those 10 years of $7.
Yeah, and if you look at the earnings also in those years, it's pretty good.
Yeah, and like I said, I have this pretty levered, which actually affects, you know, how the actual shares for this cash flow here, because these are adjusted by the leverage. But even if we take the bad year with the previous years, I get an average of $4.50 a share, which means, I mean, this could be worth a lot more. $4.50 a share would be worth a ton more.
And right now it's trading way below where it was trading during the pandemic.
Right. So I mean, if this is a 10-year chart here, a monthly 10-year chart, but I mean, you can see this was worth even average like $40, which would actually make perfect sense for what I'm calculating.
Yeah.
So. Yeah, it's interesting. This one looks a lot worse than it actually is. See, this is the kind of thing that makes me realize like Burry's so smart because he catches these things. Like, you know,
yeah.
I know you had looked at this a bunch of times, so I'm not saying you didn't catch it either.
No, I had it in the tracker for a while, but I pulled it up not too long ago, but I regret a bit because I didn't go. I was a bit rushed on time, so I didn't go fully into depth here. But because when I saw it in the sheet, it does seems a bit bad, right? But then you uncover that it looks a bit better than it actually is. But I remember I just kept going because at the first glance, it looked a bit bad right now. And I think since then it has fallen, so it's not a big problem. But down at these levels, I think it's worth to pay attention to it. And if it went up 27% this week, you might even get a pullback, even if Burry is still in it, because the short interest is still high.
Right. And I mean, this is insane. I mean, look at this. Luke Capital analyst Anthony Chukumba downgrades the stock from hold to sell and lowered his price to $1.
Yeah, you could maybe see the links to GME, right?
Like, I don't know, $1 seems really cheap. Like, I don't think I can't even picture this being worth $1 right now.
You should maybe go on Twitter and just check, because I know there's some talk on Twitter.
Yeah, I just wanted to look real quick at what the actual short interest was according to this. Which this says the short percentage of flow on January 31st was 40%.
Yeah, that's what I remember. It was crazy high. But now I get 24.
Hang on, I'm just pulling up Twitter. Why is this not signed in automatically? That's weird. You know how many times I've signed in or logged onto this and never had to sign in?
Yeah.
But today's the day it makes me sign in. Let's see here.
It's a bit flooded in the last days from one account, but if you scroll a bit more down. I just saw some talk. I can't remember who said something about it, but that the analyst you just talked about. Chukumba.
No, I'm just, you know, I usually can, and I'm not going to say I can follow, but I can at least usually see what Burry sees in something. You know, it might be a little risky for me, or actually not risky enough sometimes. I actually find, like, he'll go into things that I'm like, nah, that's not for me. But, this one's definitely interesting.
Yeah.
And that short interest, this is the kind of thing where you can see something pop because of short interest here.
For sure. But yeah, I'm just gonna keep it in tracker and see what happens.
Is this what you're talking about? The silly Chukumba sell-off?
Yeah, but I saw that guy. He mentioned it a lot. So it might have been from him. I have that. Yes, I don't remember who it was, but I see he's trying very hard to make it like a GME thing. You can look at his username, GME Short Squeeze, and then he has changed it to Big Lot Short Squeeze.
Nice. Yeah, I mean, obviously, you know, I'm not going to base a thesis on short interest itself, but you know, anytime I start to see it nowadays after watching GME, you have to take it into account.
Yeah, and this has other things too. You see management, they are trying a bit, at least from the short time we spent on it now. They have a decent book value. It appears more levered than it is, you know.
Yes, it's true. And as stupid as it sounds, some people don't look past that.
Yeah, and I think there's a little bit of risk here if they have to cut the dividend, that it will continue to drop, and that's what I'm saying. Like I'm just gonna keep tracking it. I think at this stage.
Yeah, it is interesting. And there's some other big owners of this.
Yeah, I when I checked for Burry, he was.
Who's Liechtenstein Landsbank Echtenschaft?
That's the probably like the country I live in also has like a fund for the country.
That is, yeah, but just I'm assuming this is German. They have the craziest like long words.
Yeah.
Like if you compare it to other languages, I feel like there's just always like 10 times as many letters for German.
Yeah. I can. It's like Aktiengesellschaft. Yeah.
Yeah, I'm not gonna butcher it. I'm sorry if anybody on here ever is German or speaks German and is just laughing at how dumb I sound. I'm sorry.
No, I think this is from Liechtenstein, the small, tiny country, Liechtenstein.
Oh, the actual country. Okay. Oh, yeah. Well, that would make sense too, because I know that country is like super wealthy, so they're probably loaded with like funds.
Yeah, and they only have 2 positions, that one.
And Fossil's their other one too, which is where's Fossil at these days? I can't remember exactly what their ticker is. It's just FOSL. Okay. Yeah. Yikes.
And Clifford, is that Clifford sourcing guy?
No, is it really?
I'm looking it up. Clifford Capital.
Let's see what kind of stuff he owns. Wow, PBI. Largest position.
Which one is that?
For that Clifford, his largest position is PBI.
Oh yeah,
Pitney.
But it's not that guy though. It's just a fund with the same name.
No, I know. I just like to look at funds and see what they're holding to know if it's something that would be more on, something I could follow.
Yeah. And oh yeah, PBI from Justin is there.
Yeah.
Yeah.
He is 2% owner in it. He's had that since 2018. Whoever this Clifford is.
Yeah.
All right.
Yeah,
Just want to look one more time at the chart here. All right. Well, I'll just update my. Where's regular big? Not this one. There we go. Yeah, it's definitely went down since last time I looked at it. So something to take into consideration is the value is decreasing here.
And also, like we pull these up now because of Barry's filing, but it's worth to mention also that both of the tickers we have looked at now, they are amongst his bottom positions, you know.
Yeah, and I mean, I already had it. I've had both these on deck, you know. So there's something obviously that last time I looked at, I thought there's a reason to watch, you know. Like I'm gonna put 1.5 in operating leases, so that way I just remember that most of that debt's actually leases, not. And the fact that it's just a credit agreement, I'm actually kind of surprised at that. It's just the credit agreement. It's not notes or anything else.
It seems like they should be able to manage that.
You know, if they just, like I said, they could turn that around pretty quick. How much are they paying on that dividend? Where's their
I just X'd out on everything. Hold on.
I'm just I got up the SEC report. I'm just trying to find where they're how much they're paying for that dividend. Dividends paid was almost 10. So almost 10 million. And then what are they generating? Well, I mean, they definitely need to improve more than that. I mean, they definitely need a turnaround. You know, the store has to have a turnaround.
Yeah.
So I guess that would be the big question here is, you know, it's one thing to say that, you know, you can't see this pop back and that they can maneuver through the next few years, but you know, for this to be like a really solid investment, what is the turnaround story here? How are they going to make this business all of a sudden back to the same profitability they used to be? And, you know, he brought up in that last one, if you look at a long-term chart, I mean, Big Lots goes way back too. You know, they've had some big drops, like, you know, they go from 10 to 20 bucks a couple times. They go from 10 to 40. You know, I'm not going to count the COVID one. And now we're down at all-time lows, it looks like, for a long time. But he said, you know, it's reached 60 bucks at times and then come back down.
Yeah.
So there's a lot going on here, I think.
I just saw before we move on also because you were talking about like what's the turnaround story, but they have recent news from end of November. Big Lots appoints off-price retail veterans to leadership team. So that's also something to just write down, you know.
I'm trying to get to Seeking Alpha and I just closed it. Hang on here. Sorry, I'm just reading through some of these comments just to see what other people are saying. Do you know this Grant guy who had wrote this last one?
No, first time I see him.
Yeah, just see what else.
You see this guy in the comments, Steve Budd. He's saying, "I see a dying company with multiple locations being closed. Big pause." But that's, you can look that as a positive too, from our point of view, you know.
Yeah. I just noticed Blum had commented on this, and
Oh really? Oh
yeah, he kind of disagrees. Which the points he brings up is that they generated substantial cash flow in the quarter, or he's quoting him. He said the last quarter was their seasonally strong one. He's like, they should have made some money. It's also the quarter that inventory drops significantly as they go into slower seasons. That helps cash flow but doesn't indicate a turnaround. Lower sales expectations should further reduce inventory and temporarily help cash flow.
And they disagree on the valuation, but
well, he's saying that $10. And I get why he says that it doesn't always matter. Like book value is not always a good proxy for value with things. I'm not disagreeing with him. I just think if you were to try and de-lever this by share count, yeah, I agree. It's not worth $10, but it's not dead.
and also the press release we pulled up earlier, he's saying no mention of the fact they lost over 500 million in the first 9 months of the last fiscal year before an asset sale gain. If they can't improve on that, they will be out of business within a year, which is also a good point. But that's a little bit what we, if we spend more time on this, we need to look for all the stuff that can improve the situation that they are in, you know.
Yeah, I would. What I want to do is pull up a transcript from their last earnings report, because I want to hear what management's goal is to turn things around here. I think that's really what's important here, is to know what they're saying.
Yeah.
I will. I'm gonna just make this a separate one, and then I'll read that later.
Bloom is someone we follow and have. He's solid. His work is great.
He is, so, but Bloom's a lot more risk adverse than I am. I tend some of the things he looks at. He's not shooting for the same kind of turnaround and the same kind of returns that I am. He does look at highly distressed things. He just seems to buy into them less than I would. So, I do respect his opinion. He's a super smart guy.
Yeah, I agree. And I was going to ask you, you think he has communication with management in the companies he comment about?
Oh, definitely.
Yeah.
I think I've read that he's commented on things.
Yeah. Okay.
But that's the kind of thing too. Burry's not someone who'd be afraid to comment to the board too. So
that was what I was getting at. Like Burry definitely have that connection, you know.
Right. And Burry says he'll look at stuff when it looks like it's dead, and then talk to management, make some simple improvements on things, whatever need be, and then as things slowly start to turn around, he's not looking for a 10 bagger. He's just going to take his 100% return and leave.
Yeah.
I wanted to, like I said, go through my watch list here. Are you cool if we start moving on to one of those, or is there actually you want to go through some of these funds just a little bit more and just see what else there is?
Yeah, I haven't gone through more of the funds, but we can do that. I just have some backup tickers if we run out of time, so we can just move on with what you said.
Wow, these guys are selling out everything. American Axle. This is a Towel and Company.
Yeah.
Advanced Auto Parts.
They too.
I keep AAP is definitely one that I'm keeping an eye on. That's starting to become more and more intriguing the more people I see involved with it.
We saw recently also in another company there was a guy that had the connection to the board of AAP also, right?
Yeah. My friend was telling me about this Koya Therapeutics. These is which isn't really my wheelhouse, but just interesting that he brought that name up, and these guys have a decent size position increase for them.
And who are these green light?
Yeah, this is green light.
Yeah.
And they look to be kind of trimming on their main positions here too. Here's Fairfax. Who was they're not doing a ton. These aren't really my kind of things. How many holdings do they have? 62. So they have quite a few holdings, but not really anything that stands out to me.
ICD is something we have looked at in the past.
True. Looks like Abrams hasn't really done too much. Yeah, nothing really there that's super interesting to me. Man, that's Alan Weber got in on the Container Store here, of course.
What did you say?
I said Alan Weber.
Yeah.
He got on Container Store. That had a pretty good pop, didn't it?
All right.
Oh no, actually, it's still back down now. Oh, you know what? I bet it was this recovery. I saw it. I just saw the recovery the one day. I didn't notice it was after a huge sell off. So maybe not a great choice.
I see a lot of these because we have said this before that we have stolen this list from RK, right, with the fonts and everything, and they are value guys, But,
yeah.
But a lot of the tickers that you see there is actually things they have been holding since RK did the streams.
True, but I mean, most people that are value are holding things for 5 to 10 years. You know what I mean, or longer.
Yeah.
I think there's a small niche of us who are looking kind of shorter term value.
Yeah.
We'll see if what's Carl up to these days? He doing anything?
I just checked him. It wasn't too much there. Yeah, I'm checking Miller now. Miller Value Partners. They are in GTN.
They're in what?
GTN. Gray is that Gray Television?
Yeah, Gray Television. Yeah, because we had just looked at them.
Yeah.
I'm not looking at Buffett because I already looked. If you guys care, he trimmed Apple. that's what I have to say about that. Yeah. See what Oaktree. Wow, these guys are doing all kind. I'm not. Is there anything after these ones? Or are these all just their bigger moves here? They own Berry and Battalion Energy. But nothing changed for Oak Tree, so nothing really there.
Oh.
Just seeing if there's anybody else I want to... Let's see what Old West is doing. Their value.
Yeah, there's a lot of... Was that a bio company that... what did you call it? Koya or whatever?
Yeah.
That your friend talked about? Bio?
Yeah, it's biotech. All right. Yeah, I don't see too much else in the funds that's interesting to me besides AAP. AAP, I still think is pretty compelling, and honestly, I might add or take a position in AAP if I can get a little bit of a pullback here for whatever reason. I should have. I looked at it before, and I thought good value was around mid-50s, and that's what it dropped down to. So I'm kind of annoyed that I missed that, but oh well.
Yeah, it happens.
Yeah, I'm just gonna pull them up real quick just to.
And by the way,
they're doing buybacks. They have a hefty dividend here.
Yeah. I'm pulling them up now too. It takes a little bit. I see we have had some people watching today. So by the way, as always, people, everyone, just feel free to send us some tickers, and if we have time, we will go through them.
Yeah, it just looks like earnings for AAP is down right now, but nothing substantial, and they're still generating cash flow. They're still generating earnings. So while it's down, it doesn't look that ugly to me.
And all these owners.
Yes, there's a pretty solid amount of owners. They actually their cash now is up to 317. This is October 7th. When is my data from? How is this from October 7th? Did I miss one?
No, I have the same.
How do they not have a more recent 10Q?
No, they do.
$2026. Oh, notification of inability to timely file their 10Q, so it must be a problem for them.
Which is not what you... Well, if they...
Get your shit together. Yeah, so I don't know. It's hard to say without having something more recent. I'd like to know that. I just want to see if they have like a recent presentation or something.
They've had some management changes lately.
Looks like on February 28th, they're going to have their Q4 2023 conference call. So,
yeah,
something to definitely look into is that conference calls on the 28th. I'm going to mark that in my database here just so I can tune into that. Q/28 conference call. I'm just gonna bold that just so it catches my eye.
Would be nice to have it in the sheet that it automatically pulls that in, but that's gonna be hard, I think.
Yeah, I agree. And I mean, you know, their debt has gone up, but it's still at 30% of revenues, which I don't think is that crazy. And they're good even through 2026. Those next few notes that come out, you know, and they seem to generate enough cash that they can kind of get themselves out of these higher liquidity things.
Yeah.
Or higher debt to liquidity, I should say. So yeah, they just need kind of a quarter to turn around here.
Yeah, because even if the last year is a bit poor, they are still positive on a lot of the things we look at.
It's worth $64.49, so it's a little expensive right here to me. So yeah, sadly, I'm gonna need some kind of pullback here.
There's been some insider buys the last year.
Yeah. Did I have a chart here for them? Yeah, it just recently got up to 72. Yeah, I'll be interested to hear that conference call. I'll definitely tune into that one.
Yeah.
All right. So I'm going to just move on to the watch list here and just seeing if anything's getting close into the sell area. Amplify is, but with... I mean, oil's probably creeping back up, right?
I saw them also in my tracker sheet. They were... are they close to 52-week low, right?
Yeah, I believe they are.
Yeah.
Unless somewhere I made a mistake in my numbers, but usually that's
12%.
Pretty...
And I saw also Bryce, still interesting.
I mean, they're diluting a little bit, but they don't have a... I mean, they have a decent amount of debt. But nothing too crazy. And I think everybody... a lot of these companies struggled through COVID. And now they're trying to get back to like a reasonable spot. I don't know. This one looks pretty cheap to me still.
Yeah. I need just I'm pulling them up now.
I mean, I get it right now. It's and another one that got way down there. Holy crap.
Yeah, it looks good.
But even their cash flow on
what do you have as earnings this in 2023?
Per share?
Yeah.
9.24.
Yeah. That's pretty good when it's trading at 6.
Yeah, I mean that. Like I said, earnings can be so skewed.
Yeah.
So I tend not to. I know everybody uses earnings, but I really don't. Like, I get it. It's what's left over at the very end, which is great. But the numbers, you can skew earnings to look good when they're not. Like when it's not good for the business. So it's always taken with a grain of salt. But their cash flow is more what I'm interested in, and they've done historically decent.
Yeah, and that was what I was saying next. Like, if you combine it with the cash generation, it I agree with you. This seems attractive.
I'm just gonna see if anyone's talking about it.
Have they sold some assets or something lately, or what? No.
Nah, not since 2019 was the last thing I have.
Yeah, I just saw their margins in. What do you have for net income margin this last year?
115%.
Yeah, same.
But it's probably just like I said. I think it's all just this recovery from how bad it was during the COVID years.
Yeah. Okay.
But this was why I said, if you go back and you look at historically where it was trading, before 2019, I mean, even book value was in the 20s per share. And then that's when they were paying the dividend, which they've gotten rid of. But if they can pay off like their interest and stuff, then
And is anyone owning these?
good question.
I'm checking it. I see just the normal phones.
Nah, I don't see anybody.
Yeah. I get 1% from insider owners.
The maturity date's 2027.
Okay.
And it's a credit facility, a revolving credit facility. So in terms of that, they're fine.
Yeah.
I mean, and
Does
the other thing too is
safe?
what were you saying?
Is yours showing up as safe, or does it issue shares?
Mine issues shares due to net common overhang, but they have some time to figure that out. If cash starts to return to how it's been, they can pay this debt down. They can continue to pay that debt right back down.
Yeah.
That's kind of historically what they were doing. Because it said in this, oh my God, it's always a pain in the ass to find this. So in 1 year ago, the debt from the revolving credit facility was 190 million. Now it's at 120 million. So they paid it down by 70 million.
Which is great.
Yeah.
A lot of buy ratings in Seeking Alpha.
I'm reading this guy's comment, and this is rings so true to me. He's like, GTE, VLE, who cares about EBITDA? He's like, free cash flow is the metrics. If you pay high taxes or high interest, what about lower prices of oil? So your break even plays a role too. Your definition of cheap is EV to EBITDA only. Yeah, and then he says free cash flow is not a problem with AMPY. Yeah, I agree. It's not.
Sorry?
He's just saying that free cash flow is not a problem for AMPY. This Mr. Bobby Axelrod, and I tend to agree with him.
Yeah. Isn't that the... Oh yeah, it is. He's using the name of that guy in Billions, right?
Yeah.
Yeah. What is that California penalty? I've seen it when we did the Bry too, or Barry.
What is it?
No, that guy that you just read about, he's continuing. He's saying like the scale is just not there. Plus California penalty, they would love to put them on the higher, like Barry Corp 2, by the way.
Oh, because California, there's just so much in terms of regulation. Like, there's a lot of land and stuff that's like decent there, but like, just because California is pushing so hard for EV and to be net carbon neutral, that anybody who's involved in California, there's a huge risk there.
Okay. So they want to make it hard for companies that are not in the green sector.
Well, just they don't want they're just politically hard to continue to drill or frack or whatever they're doing. You know what I mean?
Yeah.
They're not pro oil there.
Yeah. Okay.
But sometimes I feel like that kind of gets overblown too.
Yeah.
So I do like AMPY here.
Yeah. I saw Elephant Analytics has an article as well, but it's from October.
Yeah, I'm sure I've read it because, like I said, these guys are on my watch list. So it's not the first time I've taken these guys relatively serious.
Yeah.
I have valuation around 950 is what I think it's worth.
Yeah. Which is not too far away from what it reached as the 52-week high.
Just want to see more zoomed in chart here. And then, like we were saying too, I mean, the price of oil has only been going up recently, so.
Yeah. It's a bit tricky though, because there's some oil companies we have gone through in the past streams also, and there's a lot there that looks cheap right now.
Yeah, but I mean, if energy is all kind of in a similar spot, they're all gonna look cheap, kind of at the same time, right?
Yeah. But which one should you pick? Preferably all of them.
Well, that's one way to do it. Hedge your bets against amongst a few of them, and if in general they're all somewhat winners and maybe a few take off, hopefully you capture a few of them.
Yeah. Yeah, I mean that's
yeah, I definitely like AMPY here.
Yeah. And
even if you're looking on a real short term here,
if you get a big insider buy or something here, that would help also.
I also like if we were to break through somewhere around here, like if they're able to break through this like 650 range here.
Yeah.
I mean will it get back up to $9? Because that's what I'm thinking. As some of these metrics start to improve. When would their next earnings be? September 30th, so they should be soon, according to whatever this is saying.
I guess in March then.
Well, I'm happy some of these I'm looking at, because some of these I'm definitely interested if I can, you know, especially like if good earnings come out for any of these things, some of these are buys.
Yeah.
Doesn't say when their next earnings is.
Yeah, no, I couldn't find it either. I checked on their website as well.
All right. Where's my database here? All right, where's another one here? Just taking a peek at what Epsilon's doing here.
What is the ticker?
It's EPSN.
Yeah. Yeah, I also have them from before.
Yeah, I think this is still my issue, is I just don't... Because what would I get here? Hang on, I'm just trying to do some simple math here. Yeah, this needs to get cheaper no matter what.
Did you see the insider though?
Yeah. Oh, I know. That's what caught my eye last time.
Yeah. No,
But,
I mean, when did you check them last time?
what'd you say?
Because it's one recent from the CEO.
Yeah, I'm actually taking them off because it's I just wanted to see it get cheaper, but yeah, I saw that this Jason Stable had ordered.
Yeah, because I also saw the fund, the Solas Capital. When I added them, they had recently purchased again after selling out, and I saw them. They have a sale for the same amount as the buy recently, so I don't know what's going on there, but they made like a triple or something last time they were buying in.
Right. This is the one thing that stands out to me is just how clean this balance sheet is.
Yeah. But I had it like it needs to go towards, what did I put? Sometimes I am too aggressive, but I think like towards 3 or 3, 4. What do you think?
Yeah, I said $4 is a buy for me.
Yeah.
So yeah, no, I agree. It's got to get cheaper, but
Yeah.
But I do like it around here.
Yeah. This is exactly why you track things. And you have a dividend for them?
Yeah, I got 25 cents.
Yeah. And they show up as safe in my sheet, so they're probably not going to cut that dividend.
Right. Obviously I have GTE up, but
Oh yeah.
I don't know if I need to go through them because GTE is to me obviously cheap. I just think I just don't know if there's a real catalyst for GTE.
No, I don't know if people are paying attention to the share buybacks. I'm sure they do.
Yeah, that's what I'm saying. Like management has done a good job. I'm not saying anything
Yeah.
against GTE.
Yeah.
But it just doesn't seem to get any love.
No, it's a bit slow. And I have said it on a previous stream. I took a small gain there, and I had to put it into BNED.
Gotcha.
So I'm out of GT now, but I didn't really want to go out of GT. It doesn't mean that I've lost faith, but it's just BNED looks a bit more attractive short term to me.
Well, yeah, I agree. I mean, BNED, like we've talked about, it's more of an event thing where like GTE is cheap on a valuation basis, but
yeah,
and like I said, like you said too, management's doing a great job.
Yeah, they do. I would have stayed in them if I had more money there, and my goal is to hopefully get in at the same level that I were, but I think I have missed that now. But it went towards what was it, 480 not too long ago, which is around where I got in initially. I think my average was 477. And that was because they took some new debt, right?
Yeah, that's the only thing that holds me back against GT is they do have a lot of they do have a good amount of debt.
Yeah.
So there is a risk, which I don't think they're gonna delever themselves. But it just seems so cheap to me.
Yeah.
Sorry, I'm just gonna close out some of these windows because I got some of these open. Yeah, I you know the one issue I see with GTE is just that they have a hard time translating into earnings.
Yeah.
But I mean, revenues are pretty good.
They've been through a little bit of a rough navigation with the foreign risk and everything like that. There was some tax issues and stuff like that, but they seem to have overcome it a bit. So, yeah. I can see that I'm trying to go through the comments again now, and I think Stabash commented today, actually.
Well, isn't this like his largest position?
Yeah, and he says like by far too. But he just keeps updating on the share buyback that they are maxing out what they are allowed to do.
Well, yeah, and I understand why.
Yeah. Starbucks is saying the refinance debt dramatically reduces risk, which makes the company more valuable.
You said they refinanced the debt?
Yeah, that's what he's saying, but
Why is this pulling up over here now? I don't know why sometimes this thing does this.
and it's saying like there's nothing wrong here. They can't buy blocks until the earnings are out. I hope they aggressively complete the buyback after earnings come out, and I'd especially like to see management buying in the open market. We will see. He has I think you will like this what he is writing. Starbucks, he's saying stocks go up and stocks go down.
Yeah, even I'm curious what they're gonna do with the debt that they took on. But at the same time, too, it's not like they're in a position right now that the debt's like worrying.
No, I agree, and it was a little bit of confusion when they announced that they will took on that debt because yeah, what I'm also curious about what they're gonna do with it. But like I said, I didn't really want to sell out. It was just like BNED was so cheap that I wanted to put more into there, and that's the way I did it.
Yeah, I mean this at the bottom here it says that they're using the amount to repay outstanding borrowed under its existing credit facility, which is obvious. Obviously, they're going to push things back. And then it says, in any remaining net proceeds from the offering for general corporate purposes, including additional capital to appraise and develop exploration, other indebtedness, working capital, and/or acquisition. So maybe they just want to have the extra liquidity available. Maybe they just kind of like to run levered like this, you know?
Yeah.
Which, you know, as they continue to buy shares back, I'm just trying to value this properly.
And this, if I remember correctly, touched 7 when oil was up around 90, I think. Or am I being wrong now? Hold on.
No, I think you're right.
Oh yeah, because I'm in the wrong chart.
Yeah, around 7.
Yeah, okay. And then oil was around 90, I think. So, of course, that has a lot to say. But those things are a bit hard to predict. But it's tracking oil closely, and sometimes you just have to wait. Then, you know, for something to turn. And when they buy back shares down here, I think it's still compelling.
Yeah, same. I'm just doing some quick calculating here to so 10. Yeah, I still get fair value around $11.
Yeah. my goal was to initially get a double, which I didn't get, but I made a little bit here, but not a lot, which would be then around 10, you know. But if you read what Starbucks, I don't remember exactly what they said, but I think he has talked about like 20 and stuff like that.
Yeah, I'm not saying, you know, like I said, mine's always super conservative. I'm trying to be as conservative as possible in me picking this, but
yeah.
Yeah, I mean, if you want to argue what it could be in good times, easily $20. I could see this at $20.
Yeah. And even at the valuation, a fair valuation, anything can go way above fair valuation, you know.
Right. But this is why, you know what, a lot of people base like their pricing off like just earnings. And if you just go off earnings, I can see why this is trading around where it is. But if you look at free cash flow and what they could generate in the future and the fact that they're doing buybacks and how that's going to increase shareholders' value, if this ever gets, because this is the thing, people say that some people argue that share buybacks don't matter. But let's say they get to the point where they stop doing the share buybacks and all of a sudden initiate like a dividend. If there's, like, someone was saying that they could possibly buy back, you know, 25% of the shares. If we got down to like 22 million shares and all of a sudden they put like a huge amount towards dividends, you can't tell me that that wouldn't all of a sudden skyrocket the price of this stock. You know what I mean?
Yeah.
You know, the share buybacks at just like a baseline level might not seem like all that much, but it's slowly improving the metrics. And I think sometimes people just kind of like aren't looking at the bigger picture of what that's going to do in the long run.
Yeah, I agree with that. Like you can't share buybacks is in our strategy. If it makes if it makes sense, it's of course a positive thing.
Yeah, and you know, them buying here is a smart move.
Exactly. We have talked about before, like it's a bit weird that companies are focusing on buying back shares when they should use the money for other things. But in this case, it makes a lot of sense.
Yeah, I agree. All right. I don't know if I have too much to add about. You got anything else you wanted to add with GT?
No, I just like the stock.
He likes the stack. Let me just see if there's anything else interesting. I haven't pulled up RE in a minute. You want to do RE?
Yeah.
I know a ton of these are oil and energy and stuff like that. And like you were Johnny was saying too, the whole industry is kind of or not PBF, REI. The whole industry's kind of cheap right now just because oil prices, everyone's kind of bearish on them, it seems. Even though it's creeped up recently, it never seems to break back out to like 100 or something like that. If it did, you'd watch all these oil companies re-rate real quick.
Yeah.
But yeah, it has been a second since I pulled up RE, so
yeah.
We'll see what's going on.
They have established themselves a bit lower than what they were around. This is also a position we both. I think you also, Dane, has been in them, right?
Yeah, I've been in RE before.
Yeah, and I sold out like I don't remember even. Sometimes before in the summer, something like that. Doesn't really matter, but. It couldn't even with oil around 90 struggled to establish itself above $2.
Yeah, I mean the big thing with RE though is RE's in a much worse position. Like if you compare this to GTE, I mean look at the share dilution here, the debt that they have in comparison.
Yeah,
it's definitely more risky.
Yeah. But at the same time, 142 You see, it's 52-week low was 125, but I have seen now it's like hovering a little bit around here, and when I was in it, it was around like from 190 to 210 to 20,
Yeah.
and it was going up and down around there, and now it broke way below that, and I got out before the big drop. But I mean, at 125. This is interesting. %11 short interest.
Yeah, it does seem cheap at this level.
Yeah. It's a bit similar to
the other
chart.
thing too is they've actually been improving in the past few years. Like things have looked a little bit better. Historically, they've kind of struggled for like a while.
Yeah.
And now it looks like more recently things have been slightly improving.
And they've had a couple of acquisitions in 22 and 23, so maybe they have been good.
Yeah, which, I mean, if they're getting these acquisitions and they're a good thing, obviously that's a big benefit.
Yeah. And we have seen some smaller insider buys in RE, right? Not very often, but it's not like they don't buy.
Yeah, it's just usually the amount's small enough, it's not all that impressive.
No, I wish it was higher.
What is this in? This is in straight up dollars? Okay. I was just like, wait a second. I was like, what is going on here? And they're evolving is in 2026. So this one is interesting. Really, because they have some time to play around with. My question is how much cash can they generate in that time?
Yeah.
But this past, so this year has not been as good as last, or 2023 wasn't as good as 2022.
No.
But if they can start to pay some of that debt down, because they got to pay that debt down no matter what.
Would you be scared of more dilution here, though?
Possibly, because they're not generating a ton of cash, and I'm assuming that the equity that they took on was to pay for that acquisition.
Yeah.
But that acquisition really needs to come through fast if they're going to recover from this.
Yeah, because I see right now they don't have a lot in short-term debt, but they also don't have cash.
Yeah, this one's a little riskier for sure.
Yeah.
I just want to go down right to the comments because he's saying what's he saying? Yeah, he's just saying they got to shop for the appropriate acquisitions. Yeah, this is one if you're going to want to... The only way to know anything about this is to really try and look into what they own, what management thinks. This is another one I'm going to pull up the transcript and try and read the most recent one to try and figure out what they think is going to happen going forward.
Yeah. I saw they were speaking about the same stuff that we do in some of the comments. There's a guy saying, why does it feel like a catch-22 for Ring? Adding more debt or diluting shareholders to achieve more growth would seem to only hurt the stock price more. And then the author is replying, the key here is to get the debt ratio down. Fortunately, selling prices are so low that the return on a purchase is often at least 30% before debt costs. Many times, a few operational improvements, taking care of deferred maintenance during the selling process, etc., often gets that figure up. Therefore, it makes sense to purchase rather than drill for growth. Once the job is done, the stock is often fine. So that's a bit what we have talked about, it's a bit more risky here because they need to take care of a few things for this to potentially turn around. But at the same time, if you look at the 52-week high, it was at 243, which is 71% from today, you know.
I mean, yeah, no, I have my leverage counter's saying shy of $3 is what it thinks it's worth.
Yeah.
You know, and I actually don't think the dilution was necessarily a bad thing due to how much debt they had. But the problem is you know, I would prefer to see them pay that debt down than opposed to them just putting it towards acquisitions, because they've historically generated cash. But is it all always eaten by CapEx? Is that what's going on here? No,
CapEx
not necessarily.
has gone up.
So I don't know. It's hard to say.
As a side note, in Ring though, it's a 11% short interest.
Well, I could picture that. I mean, if look at the share count. I mean, we went from 18 million in 2013 to 10 times that.
Yeah.
I just wonder if management knows how to pull this off or not for this company.
Yeah. Yeah, I there's a reason I went out of Ring and decided to stick with GTE, and I think what we have gone through in the stream today with the other energy companies plus maybe Bry is a bit of a more attractive opportunity.
Yeah. Pay down debt 2026. I'll keep an eye on Ree. I'm not going to take him off the watch list, but I'll keep an eye on him.
Yeah, I also keep them in the tracker.
So I wanted to just go through just on deck and see if anything had gotten really cheap recently. So let me just sort this real quick.
Yeah.
How do I want to go by? I guess we'll go by 52-week low. Obviously, you're going to see similarities, like, you know, AMPY. You know, some of the same stuff's going to pop up here that's interesting. APPS is down and actually has a decent amount of insider buy. You looked at Digital Turbine recently?
Which was that?
APPS. APPS.
Oh, yeah, I have them in the tracker. Oh, no, I don't actually. No, I haven't looked at them recently then.
They have a lot of, I mean, they don't have a lot of tangible goods, which is, you know, something to obviously take into consideration, but just on a cash flow range, even on a 7-year average, they're positive. Which they are diluting, but that's not too crazy. Recently, they had some good. I think this is the issue. They haven't had a ton of like earnings either. I think that's just too expensive right now. Just looking quickly.
Yeah, I've just pulled them up now. It's a bit annoying. I've talked with the guys from Y Sheets here because I wish you could like tick off the sheets that you don't need them to pull in, because it takes a little bit of time, you know.
Right.
And there's a few that I don't need, and they say they will maybe have a function like that in a future update, but so far I need to wait for all the sheets. It's a bit slow.
Yeah. Yeah, I don't know if there's much you can do about it. Luckily, with the way the one nice thing about the ad hoc one like I have is it's able to pull it up relatively quickly.
Yeah.
But without totally restructuring the way it's done on their side, I don't think there's much you can do. I was gonna see if anybody's talking about it, because just from a quick look through, I don't see anything here that's standing out. Which, you know, I tend, when I go through on deck stuff, it usually is a pretty quick look over. You know, I can kind of tell if it's getting cheaper or not, or if something's really changing. But otherwise,
and also it's around 52-week low now, so this could drop further, you know, if it breaks that bottom.
Yeah, I know. That's what I was trying to calculate in my head here, because I take into a percent a little bit of what the share price has been.
Yeah.
But I guess that doesn't affect us too much.
No. A lot of recent articles, though. 3 articles in February.
Yeah, where was I just on that? There's so many of these stupid things open all over the place. I don't know why my thing does this. Which one is it? It's got to be one of these. There it is. Found it.
There's a guy on Seeking Alpha calling himself losing money by investing. I like that name.
I mean, I definitely think the idea is interesting, because I could picture a lot of people going into something like this, just to save on how much the Apple charges and whatnot. But I thought by law that was going to have to change. I think they changed that in Europe, which will probably mean that they're going to just do it in general. You see anything on this?
No, I'm just trying to read through. I don't think I've looked at these before.
So, the thing that's interesting is they were stating that it justifies an investment in DT also because at a trailing. Oh, hold on, blah blah blah. Where was the one I was reading that was talking about it? No, I can't even find where I was looking.
Yeah. They have some new one store Korea partnership, which someone is talking about. It will they will pick up 40 million new devices from that Korea's one store.
Yeah. Where was I just reading? He's basically saying, you know, if they could push into Apple and Google Play, you know, and they're not charging the same amount, you know, you could see a lot of people go to them to save money in terms of selling their software without the commission fee.
Yeah.
But yeah, I guess they're talking about, you know, competition too. You know, if Meta comes in here or anybody else, it's just you're trying to fight against really big companies no matter what, and they could easily kind of bully you out of the area.
Yeah.
But it is cheap.
They have also bought back a little bit of shares.
Yeah, I think it just needs to get a little cheaper.
Yeah, I agree.
Even though I'm saying it's cheap, like it's definitely not cheap enough. Like I have it almost fairly valued here.
Yeah. But why are they trading so cheap? Has something happened now? Is it like a report or so?
I think there's just not enough proven. You know, like you know, it's a app company, so you know, it's just you gotta fight into that tech industry. You know, and everything's a lot. Like that's why I said it's not really like a lot of tangibles. You know, it's mostly the brand name and you know their software. So what is that worth?
Yeah.
I don't know. It depends what it generates. That's why tech's tough, because tech can change so quick. You know, you can think they have like this good plan and someone else can just walk in and either steal it or beat them out in their own game.
They also missed on the guidance in early of February. And they also talked about that the outlook is not promising for them. So I guess this can take out the 52-week low and go even further down, which is kind of what we want to see at this stage, right?
Yeah.
not for the company, of course, but for for us investors that are lurking to get a good entry.
Yeah,
It's
I'm
a
trying to
bit
see if
brutal to
there's.
hope that companies does bad.
Yeah, I'm looking to see if there's anything that I like that has a lot of insider buying. Expensify does, but
I saw.
I
I think
wonder.
when we went through the funds, I think I saw one of the big funds had the Expensify.
Yeah, I just wonder if they're going to be able to actually get that business going, because as of now, nothing's happened yet. You know.
Yeah.
It's probably cheap right where it's at right now, but it's probably not cheap enough based on the fact that they're going to need more.
Yeah, yeah.
Is there anything else you want to? I mean, we're slowly getting here to the 3-hour mark, so maybe I'll go through like one more with you, but
I don't have so much more pulled up from before. So unless anyone's watching, has they? No one has sent any tickers to us.
Yeah, pretty quiet chat today. I know that it looks like there were some viewers I know I saw, but
Yeah, we had some viewers, but that's all right. We have gone through many companies.
yeah, I have other stuff in here from this week that or from Friday that we got the weekly movers and whatnot that I wanted to go through, but nothing. I don't know if anything's like pressing to see right now. So we can probably start to call it here.
Yeah. Have you also noticed that there's a lot of banks again in the weekly and daily movers lately?
Yeah, I mean, I think
banks and insurance.
Yeah, I think part of it is a lot of them have kind of put themselves in riskier spots with the kind of loans they've taken on. You're starting to see some defaults coming through, whether it's credit card risk. A lot of the office buildings, as they have to restructure the debt that they hold on those office buildings, they're getting ugly.
Yeah.
I think these rates being higher for as long as they have, I don't think that was priced in well by the banks. I think I was listening to something. I think it was Jamie Dimon was talking, who obviously is like he's like the main guy you go for like bank issues, and he was saying that the problem is that the Fed kind of tries to give these like forward like guidance towards like what banks should do, and they were basically before these percentages like skyrocketed again. They were saying like you guys should be investing because we see our guidance like staying low essentially. So a lot of these banks like price all that in, and now the rates jumped up to 5%, which isn't what the forward guidance said. So they took on more risk than they really should have, which you can blame on the bank. Jamie Dimon's always been a super conservative banker, which is I think why he's done so successful, because it's a bank. You don't need to kill it. Like the more risk you take on, you're doing it essentially for no reason. I mean, he slowly scales up, and as other banks fall apart, he buys them at like great prices. So, I think you're going to see some of these things. Like New York City Bancorp came in, but they also own like a lot of assets that you could argue they're going to lose a lot of money on.
Yeah.
And if their net interest is constantly becoming negative, like or declining, who's going to want to invest in a bank?
Yeah.
Like that's the whole point is they got to get that increase on their side.
No, but it's okay for today. For the coming week, we continue the normal schedule, right?
I think so. I don't think I have anything I was going to change too much.
Yeah.
Probably over the rest of the weekend, I'll try and get through some of those tickers. Obviously, markets are closed on Monday for President's Day here in the States. So we'll get an extra day to kind of get caught up on things, hopefully. And then, I should be on Tuesday, my normal time.
Yeah. Sounds good.
Hopefully I'm awake.
Yeah.
It's so tough. I don't know how people do it. I don't know how people get home and have so much time to just go through all this stuff. I know probably most people doing this, it's a job. It's not a side hobby. But we'll see.
It's like
there's a few things
like,
I'm interested in. I don't know if I'm going to add or not.
Yeah, for sure. Yeah, and this week that we are in now, there's been some big moves both up and down, and a big red day. Was it Wednesday?
Yeah, but that was when. This is the thing too. Like when they say like interest rates are going to get pushed out, like. Yeah, like I said, some of the banks and stuff and some of the really leveraged companies might get screwed because if they're trying to re-rate at the wrong time, I mean, that can really bite you. But other than that, I mean, I feel like things are kind of staying on the same path. And I think inflation in general is going to continue to tick down, even though we had a little bit higher than it was expected. But I don't picture anything really starting to go wrong. I think the economy is going to start to recover if interest rates start to pull back at some point this year. Obviously, that's bullish for equity. And then unless you really start to see consumers defaulting on loans and whatnot, I think it's going to be another good year.
Yeah.
You know, despite everything going on, you know, there's so much going on and there's so many things I think that could cause a crash, but as of now,
around New Year's we were looking into the crystal ball a bit, you know, and we agreed that 2024 in the summer we will be happy, right?
Yeah, I think there's, I mean, at least for the companies that you and I own.
Yeah.
So.
Yeah, I have my faith up about them, and. Would you have any idea, like, when do you expect some development in BNED in terms of them releasing the transcripts and all that for the second meeting?
I don't know. The only thing I know is because I didn't get involved to see when the first ones actually got released. I just know that in terms of what the writing was, that was like maybe a week or two before before the second session meeting. So for us to get the way that they've rewritten things and where the Department of Education is standing, we probably won't see that until maybe the week before they do March. But I would imagine the actual transcripts from this last session, it should be any time now, within a week or two, I would think. I mean, how long does it take to transcribe a YouTube video?
Yeah.
I mean, it does it basically automatically. So,
no. But if anyone's watching are interested in that stuff, we can promise that we're going to talk about it when we notice that there has been some updates. Because, like we keep saying, this is probably, if you exclude the next Alto report, this is the company that we think has the most like near-term catalyst, which can drag out, like we talked about a little bit. But things should move before November, don't you think that, Dane?
Yeah. Oh yeah. I think March and April are big months, and then like you said, we'll probably over the next two quarter reports for Alto is really gonna show off what's going on there. Like that thesis, if it starts to play out, will be because of that. And then an Alto's story, I feel like if the next two earning periods are good, the story only keeps getting better from there.
Yeah, and I am a bit excited because like I started the stream with, I've been in Alto for a while now, and this is kind of what I have been waiting on, this 2024, 2025, you know. Mm-hmm. So we are getting there, but of course I don't think many people expected what happened in October. Or when it was October, right?
Yeah. Well, like we always say too, you can't predict everything. You know, I mean, sometimes sometimes it's just unlucky. You know, sometimes stuff doesn't go through.
But
you know, which is why.
Sorry,
go ahead.
Sorry.
Oh, I was just gonna say, for anybody who's looking at our style, just once again, always a disclaimer is that, you know, these are risky companies and we take large positions, which, you know, it could backfire on us. So, you know, please don't take these as buy opportunities. You know, do your own due diligence and just take this as entertainment and and try and catch any tidbits that you can from us. But please don't just buy these stocks on how we're talking about them, because we could easily be wrong.
Yeah, for sure.
But I don't think we are. But you never know.
No,
we'll see.
We will see. We have to, like we have said before, for the stream also, we have to prove ourselves, and that's what we are hoping to do. Yeah, we need to be a bit offensive as well, but yeah, I'm a bit excited for the coming months, to be honest.
Yeah, I
hope it will be justified.
Yeah, no, I think. I think Alto's a little bit longer of a play, but if BNED is able to turn things around and/or get a good result from the Department of Education hearing, that could be easily a multi-bagger. Which, if that hits, my portfolio will be set for the next while. I will have done exceedingly well. So as a full disclaimer, I have a large position now in BNED, and I just continue to add shares as we get anywhere in the low 80s to definitely in the 70s. I'm adding shares. So, and I will just continue to pile money into it as I see that opportunity. And if something takes a turn for the worst, it is what it is. But I just don't see it. I don't see the other side's arguments. I haven't, and I continue to be almost amused at the way that they try and portray what they're doing as being a positive for the students. It just doesn't make sense.
Yeah, and just I want to just I know I've been talking about us using stop losses, which is true that we have, but this week I removed my stop loss in BNED.
Yes, I've also obviously removed mine, but my cost basis keeps coming down here, especially as I'm buying in I've gotten a few chunks that I've been able to buy at like 78 cents. I think I got a couple at 79 cents, which has brought down my cost basis drastically. So as I continue to keep that down, it makes it even more exciting to me. It's rare that I find a play where I can really scale down at these levels and I have the confidence, but this one just I think has like such a clear event to me that can be such a catalyst to the upside. So like I said, I'm going to continue to watch there, and I'm definitely looking though for some other things to get into right now. So the ones that definitely interest me are Advanced, or some of the other names. Big's interesting. I think I'd want to see a pullback now on Big, but we'll see.
Yeah.
Some of these other tickers, I'll read through RE again. GTE is obviously always interesting down here. Epsilon, a lot of energy is interesting to me.
Yeah, I agree.
And at this point, you could pretty much just put the rest of my portfolio in NVIDIA, and I could just ride it to 1,000. Everyone knows it's going to 1,000, right?
Yeah.
Is NVIDIA not going to go to 1,000? Is there anybody who doubts NVIDIA will hit 1,000?
Let us know in the chat.
Yeah, it's going. It's gonna go.
Yeah.
The one that's interesting to me is AMD here. What's going to happen with AMD? Look at this chart.
Yeah. That looks like a good chart, to be honest.
So, I mean, I know everyone's focused on NVIDIA, but I think AMD, if you're looking for the value play that still exists here, and you want to just keep crying AI, right here, guys, AMD.
Yeah. Did you see the OpenAI video thing now?
Intel. What's up?
Did you see the OpenAI the video?
No.
They have released like a, you can send in a prompt and it creates a 1-minute video, and it's just in a test phase, but it looked pretty cool.
I've heard of these. I've seen some pretty crazy videos using AI. So
yeah, I think they tweeted about it on Thursday or whenever it was. Maybe it was yesterday even.
Cool. Yeah, we'll see.
Yeah.
I'm always watching, X, or I'm on Reddit, and you get to see all that kind of stuff on there. See what people are playing around with and building.
Yeah.
All right. Well, I think I'm gonna call it there.
Probably our longest stream for a while, right?
What's up?
Probably our longest stream for a while.
Yeah. It's sometimes it's tougher on the week. On a Saturday we can sit here and really. I wish I had this time on the weeknights to sit here and go through things for this long, but
yeah,
it's just tougher.
Yeah.
I'm out of drinks, so that means that's my cue to get out of here.
Yeah.
All right, everybody. Well, enjoy the rest of your weekend. Have a nice long weekend in the States here if you're able to. As always, I have to work, but whatever.
Okay. All right. Enjoy that.
Yeah. Have a good week, man.
See ya.
All right, everybody. Have a good one.